Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Ulti is no longer paying on Friday, or so it seems. I tried to do some research and figure out why they switched it up, but I can't figure it out. I'm sure there's just some administrative change because their ex-dividend date was still on Wednesday, but then they paid out on Thursday. I didn't notice until I looked at my account Friday morning and I didn't see any Ulti dividend. And then I was like, wait a second, it looks like I purchased Ulti yesterday. So my drip was still on and I reinvested in Ulti. But I'll tell you what, this week has been rough for Ulti. There's been a lot of up and down and choppiness in the market and in my account. But Ulti has not recovered the way that some of my other dividend paying funds have. I did get some more QQQI last Friday on the dip. I was trying to pick up some KQQQ, which is some curve today, has a dividend distribution rate of about 18%. So I was trying to start dipping my feet in the water a little bit with that today. That way I could watch it and compare it to QQQI. We're gonna have to do a comparison video between Ulti and all of these other dividend paying funds because it has just not been performing the way that I would like to see it perform. I do think it has a lot of potential. I think there's going to be some times where it does outperform these other funds, but it hasn't been doing it lately. I still am of the opinion that a lot of the reason that it hasn't been able to grow is because of the protective puts. Now, we've had some really bad down days, and with all of the tariff talks and the choppiness, there's been some days where those protective puts did kick in, and they did help us out. But overall, I think they're just too expensive. Trying to pay out such a huge distribution. And so some people would say, hey, they need to hold back half of the distribution and then they can keep their NAV steady. But I don't see that happening. I don't think they're going to do it because they would have to cut their distribution rate, but I don't think it would help either. I have been dripping 100% of my Ulti distributions and it's still flat to barely green most days. So right now, I don't even know. It's down. My position is down to close to what I paid for it. I would call it flat without looking at the exact numbers. I know some of you have brokerages where you can see the returns with the dividends and distributions included. Schwab does not do that, that I can tell. So I would have to go back and look at my notes in my little flowery notebook and see exactly how much I have invested, but it's essentially flat. And I know that because I have a dollar amount in my head that once it's over that, I realize it's in the green. So I may start paring back my position in Ulti because my other funds have just been performing so much better. There's no reason to have it if all of the income is coming directly out of my NAV. Now, I haven't been spending the income yet, and I don't need to right now. But the whole reason that I'm stocking up on these covered call ETFs is for income in the future, so that in a few years when I retire, my income won't take near as big of a hit as it would if I don't have those funds. I like the idea of being able to get the distributions without having to sell off shares and spend the money as I want to. Now, I'll probably, once I start taking the income, I'll still be growing my investments, but I'll be taking my distributions in cash and then selectively putting them back in. Right now, I am reinvesting my distributions in all of my covered call funds, and I've got over 20 of them at this point, I think. But I've got sizable positions in SCHD, which it has not been performing that well recently. It's consistent. It has good dividend growth, and so I'm not going to pare back that position. Overall, long term, it does have a respectable return, and so I anticipate that's going to be true going forward. And so I won't be selling off my SCHD, but I'm not adding to it either because it just doesn't perform as well as some of these other products. JEPQ has done well for me. QQQI has done well for me. I want to get some KQQQ. I've got my GDXY for my precious metals exposure in the covered call arena. Obviously, I've also got some SLV and some GDX in other accounts that I've talked about before. But as far as my precious metals spinning me off an income, the bulk of that is coming from GDXY. I do have a little tiny bit of SLJY. It does not yield near as much as GDXY, so I'm probably not going to be adding to that position much. But QQQI is the one that I've been adding to most often most recently. So anytime I see a sizable down day in QQQI, I buy. It was a good decision to buy some last Friday. Had to move a little bit more money into that account so that I could cover the purchase that I made. And it bounced back nicely. And so I've been in the green fairly consistently on my position in QQQI. And that's without even taking into account the distributions, which are over 13%. So that's a pretty, if you can get your money in an account and get 1% back per month and still keep the NAV in the green, that's pretty good. Obviously, I was hoping for more with Ulti. I saw that when I first started purchasing it, it had a 17% total return for the time period that I was looking at. They had switched to weekly pay, which I thought was going to help. And it is nice seeing those weekly payments roll in and purchase me more shares. But if the NAV is just going to continuously go down by the amount or more than the payments that you're getting, that's not good. Even when it has had banger weeks and it's been going up, it hasn't gone up enough to make it worth holding. Now, if you can figure out when to trade it, like if you're buying it after ex-dividend date, after the payment date, if it goes down by more than the payment and you're buying it and then you're riding that wave up to the day just prior to the X date and you're able to swing trade it that way, you might be able to, and I might try to do that. Right now, my plan is to sit on it for, a handful of weeks and see if this change to Thursday makes any difference. Because they may have thought that they could get less slippage or less people selling out of the fund. It might help their liquidity. It might be because options expire on Fridays most of the time. I'm not sure why they've made this administrative change, and I don't know if it's a permanent change. But I want to see how the fund reacts to that situation. Maybe they're under less pressure that way somehow going into the following week because they have that Friday now to try to recover. Fridays a lot of times have been kind of going down recently and then rebounding on Monday. So I don't know that it's going to help them, but just in case it does, I don't want to bail right now. I'm going to wait a few weeks and see how it affects the fund. See if this new Thursday payday is going to be a permanent thing and see if they can use it to their advantage so that we can actually get a little bit of growth. Because what I would really like to see is, obviously I would like to see that it pays out on Thursday or Friday, whenever they're deciding to pay it out, and then see it recover by at least half of that distribution before it goes to another distribution. Because if it's got an 80+% distribution rate and they can recover half of that each week, you're still going to be getting a 40% return, which is phenomenal. There's not very many investments out there that can do that, especially not consistently. So if they were able to do that, that would be amazing, and we would all be rich in short order who were investing in that fund. But they haven't been doing that consistently. What I have been seeing consistently is that they're never recovering from the distribution. And that isn't acceptable. If they were recovering at a rate of 25%, I'd still think that was great, and I would keep my money in there, and I'd probably put more money in there. Right now I have probably getting close to 5,000 shares because of all of the dividend reinvestment that I've been doing. And it's just not paying off. I'm possibly turning, I know that right now they code it as being return of capital. And so at the end of the year, we have to see if that's still the actual coding, because I have been told, I'm not an accountant, I'm not a financial advisor, but I've been told that even if they code it as return of capital each week, at the end of year when they go and do their books, they might actually change part of that into income. If we're just turning our own money into income taxes and we get long-term capital losses, but we pay income taxes on some of the gains, and you wind up with a net zero at the end of the year, you're actually in the hole. So that's not a recipe for financial success. So I will keep talking about Ulti, even if I sell out of it, just because it's going to be interesting to watch. And if they change their strategy and start performing better, I might jump back into it. And I will tell you before or when I sell all of my Ulti. And I may not ever sell all of it. I might just start paring back the position or start moving the distributions into something else, which, as I said before, if you're just doing that for diversification, that's great. If you honestly believe something else is going to, you feel like it's guaranteed that it's going to perform better, you'd be better off selling the fund that you own and moving directly into it instead of just using the distributions to diversify into it. Now, if you don't know, like me, like you don't know, is Ulti going to recover? Is it going to change its strategy? Is it going to start being better at picking stocks? And you think that it might actually start outperforming, then taking the distributions out of it and putting it in something else just for diversification's sake might be a good idea. But I'll probably start selling off the position if it doesn't start doing something in the next few weeks, because there's just been so many. I mean, WPay has been doing better for me. GDXY has been doing better for me. JEP-E and JEP-Q and SPY-I and SPY-Y. Those have all been doing better. Curve has been doing better with their QQQI. So a lot of funds out there have been doing better.